An interesting topic that I think we should discuss that a lot of people maybe not understand and don't realize how they can use to their advantage as a borrower is something we term or we call cross collateral in this business, and how does that work and so forth. A lot of times I find, and sometimes you have somebody that might be in a cash pinch, but they might have some really good collateral that they've owned or paid cash for in the past, which from a lender's perspective, I have found is really easy to work with, because let's take an example of maybe a project that I would lend $100,000 on. And somebody says, no, I like this project, I know where I need to be on it. And I say, nope, $100,000. And they say, well, I've got this property, it's worth $400,000, it's in a free and clear position, you can take a first lien on it. I'll put it up as collateral against the project. My answer? Let's go. Let's do it. It's a very easy no-brainer on the hard money bankers, hard money lending side. And a lot of times for the investor, a confident investor that's willing to put their money, our money where their mouth is, they don't care. Put a first position on it, I'll sell, I'll close out the loan, and you can use that. We use that a lot of times. I term it kind of like each house is like its own little piggy bank that you don't actually have to pull cash out of your pocket to use. So cross collateral can be a huge power move for investors that have that ability. I don't know what your experience
to lever it up, and we use it a lot to substitute equity for cash.
Sure.
Especially on the purchase of real estate transactions, because they may have a deal that they need 30 grand in cash. They're like, you know what, I don't want to tie up this 30 grand in cash. You know, I have it, I just want to tie it up, but I have this free and clear townhouse worth 100 grand. Can we just sub it?
Yep.
Absolutely. I mean, we're trading equity for cash into the transaction. It's very common. And I would say that maybe 25% of our real estate transactions, our deals have cross collateral. And why not? You know, if you have $30,000 cash, or you can just put a lien against this property. I mean, yes, it costs a little bit more money related to, you know, title work and a title insurance policy maybe related to it. But I mean, we're not talking a substantial amount of money. It makes so much more sense, because that $30,000 that you may have liquid, or if you have it or you don't have it, but if you do have it, $30,000, I mean, there's opportunity costs associated with that. Maybe you can buy another deal with it. Maybe you can do other things with it. So just understanding that, you know, you could use that rental portfolio or other free and clear assets as collateral in order to kind of accommodate that. And, you know, most banks and other private lenders probably wouldn't know how to structure a deal like that.
Yeah.
That's a piece of cake in our world. We do it all the time, and it's a real good way to lever up.
Keeps cash in your pocket, which is huge in this game. Keeping cash in your pocket it puts us in a very comfortable position, and you can use it a lot of times in a working relationship moving forward for multiple deals. And it's
like sub in this one for here, sub in this one for here.
Yeah,
absolutely.
And we try to get, like Jay said, that creativity is huge. A lot of lenders don't do it, but take advantage of it if you have that ability.